Zoom, can you see everything? Can you see the PowerPoint? Somebody, anybody?
Terry.
I can see it.
You can see it?
Thank you. All right. Just this button.
Ready to go?
Red belt look really big. Yep, you're all ready to go.
Okay.
Just a little era.
You can. Yeah, that's fine. That's fine. Okay. You need your crow.
That's Russell's crow.
Russell's crow. We had too much fun. All right. How is everyone?
You want me to be
Good.
controlled?
Good. Sure.
Make your life easier.
So for those of you in Zoom land, sorry, but you missed me dressed as a minion. The ones here in live got to see it, but And we have beer here, by the way. So anyway, so I'm Justin Cerrato, attorney with Blue Ocean Title. And I just wanted to, and I'm Derral Clarkson here, who took some of his valuable time to meet with us. And you want to yourself?
Yeah, my name's Derral Clarkson. I'm a tax partner at Pivot CPAs. I'm lucky enough to know Justin here for a year or two now, and we're happy to help out if anybody has any questions about whatever goes on today. But I'm here more to back up for Justin, so hopefully.
And you guys that have been in classes with me, you know it's more of a collaborative. I'd rather not just speak to you the whole time. So just, go ahead and raise your hand, ask away if you have any questions, but let's make this kind of fun and entertaining and a collaborative effort, like I said. So we're here to talk about incorporating your business. So for those of you, even if you're a sole practitioner, sole proprietor, let's call it, it's always a good idea to incorporate your business for a number of different reasons. You've got kind of the liability arm and you've got the tax advantage arm. So we'll kind of delve into both of those. So registering your entity, first and foremost, you're going to go to sunbiz.org. That's the Florida State Registry for all entities, whether it's partnership, company, limited liability company, corporation, not-for-profit and for-profit. So you can really, there's two ways you guys are going to utilize this. So you're either going to file as a limited liability company, and you can go outside of these, but for most of you, these are going to be the norm. And then you've got your PA, your professional association. So, either, no matter which of the two you choose to file under, you're going to want to elect as an S Corp. And I think Derral will attest to that, correct? For the most part.
Usually you don't have to do that right away. I usually try. I think it depends on the year, how you're doing, but I would say that is a second step. I always kind of have you start as a single member LLC, and it kind of depends on how your year's going of where we go into the S Corp.
Right. And the S Corp, just to, give you the simple definition of an S Corp, it's going to be a pass-through entity, correct? So you're not double taxed. You're not taxed at the corporate level and on the individual level. So basically you're treated as an entity, but it's going to, you're going to take distributions and those are going to funnel down to your personal return, rather than, again, having a salary, paying payroll tax as an employee.
The reason you do the S Corp, but it really, more than anything, a lot of it is around the self-employment tax game. I know everybody here has filed before. If you file before, you pay that self-employment tax on top of the federal tax. So it's the Social Security, Medicare, where you can kind of play the game a little bit with the S Corp. And then there are also some different issues that come along as the numbers get a lot higher as well, that can come into play.
So can I ask a question? So if you are forming, like you've got a partner,
Mhm.
or you're sharing ownership with someone, would that same apply, LLC or PA, or is that really for a single person?
I would actually, so in that scenario, do you get paid out personally, or does the commission get split?
So if it's you and another,
So it would be.
are you paying like your LLC and another LLC?
I would think you would both have your own, more than likely. But so if you sold $1 million house and you got a $40,000 check, would you get 20 and they get 20?
Okay,
or-
let's say that group was eventually, maybe they were married. How would that be different?
S Corp, sorry.
As
Yeah.
well?
Yeah,
Yeah.
that makes sense. That still makes a lot of sense.
So, you're going to make that election if it's appropriate. You're going to obtain a tax ID for that entity, so it's treated as its own unique entity. You're going to establish a bank account, and then you're going to, inform your brokerage to have all of your commission checks payable to the LLC or the PA rather than you individually. So the state of Florida, to avoid liability and to be treated to take advantage of the tax benefits, you truly have to operate as a company. So it's not a matter of just filing, sitting back and doing absolutely nothing else, having checks come into you individually. Again, you need to operate as a true business. Any questions there? Let me ask, if most of you incorporated as agents? No? Raise a hand who has.
I was gonna say, I'm an LLC.
Yeah, that's what I mean. Yeah.
I always
So not
kinda-
too many.
I always tell people when they come in, I say, at least just set up the LLC and run through that. And then you can do the S election later if you want to. And it really, I kind of say a sweet spot is your revenue or your commissions are over $100,000 is where I start to push people towards an S corp. I can kind of explain that a little bit more later if we have some time, but just big picture, I would, from
Use
the
that
legal
as a-
standpoint, I would start with the LLC or PA.
Mhm.
Because you still have the ability to elect S. If you're getting a 1099 in your personal name, you can't elect to be an S that way.
Yeah, good point. So, here on more of a micro level, as far as registering that name with FREC. So, a lot of you get really clever, want to file, a perfect red daisy LLC. Well, it can't be that way with FREC. It has to match your license name. So however it is, first name, middle initial, last name, it's got to be first name, middle initial, last name, LLC. Yes.
I just ran into that problem because I tried to open a PA, there's already Kim Garcia.
Right.
LLC.
Right.
So I went ahead and, which I just submitted everything to the DBPR.
Yep.
But I added a 6. I went to the office, they told me to add room.
Probably not yeah, that's not an issue. I mean, you can always throw in your full middle name if you have one. Okay, yeah, that's the issue. So, yeah, you can use numerals. I've seen that instance as well. Yes, Sherry.
And that kind of leads me into what you were saying a minute ago. So if my husband gets his license in January, and then instead of doing an LLC for him, LLC for me, we would just go into an S corp. Is that kind of what you're thinking?
What I'm not sure about is how you get paid. So if you close or he close, are they both going, they pay you through the same? Could they pay just in your name? I would say,
Like, is he going to be an employee of yours? Is he going to be an employee or?
so I have another couple that do this, and what they do is they have the wife's name, LLC, and they run all commissions through there, and they both take their own W-2 out of that. So that LLC can elect to be an S corp. Does that make sense? So an LLC can just be an LLC, which goes on your personal return. The same thing as if the 1099 was in your personal name. You can elect to be an S corp, but that means it files its own tax return. So what I have another couple, what they do is they have all commissions paid to her LLC name, and then they both run a W-2 out of the S corp. So they, in theory, run it as one business, which I think is what you're asking.
So going back to my question before, if you've got 2 licensed agents in partnership in the LLC, husband and wife or whatever, then if everything's going through, because in Keller Williams, we'll have like one of us is getting commit, in the downline, the other, that's kind of be backwards for us. But so either way, so it's all going through one person. The LLC is going to have that name. My question now is then, should that definitely be an S corp at that point? Because
I think it all comes back to me based on, once you have a certain amount of revenue, I usually say the talking point's around 100,000.
so just to clarify on that.
Commission.
So both of us are doing work and getting paid for, we're both licensed agents, but it's going under, say, my name.
Mhm.
And my name is what the LLC is and what's with the state.
Mhm.
So I have to get paid from the brokerage under
Right.
my name. And so then to pay that person, the other party or split it or whatever, does that need to be an S corp?
Doesn't have to be.
Doesn't have to be.
I would
So-
still base it based on the similar thing, which is once your revenues are over 100,000,
Okay,
that's when the S corp starts to make sense. There starts to be a spread where the amount
okay.
you can kind of play the game with and save, that it makes more sense.
So from tax purposes, that would be what, a Schedule C
That's right.
on my 1040? And what if I'm paying the other person, if they get paid out of my Schedule C and they would have like a,
It's just it still gets treated the same way on the personal return
okay,
because you guys are married. So it's a joint return.
okay.
So you can't name the LLC like and then your brand per se.
No, so what you would do in that case, I was getting to that, is you could just file a DBA, a doing business as. So if you're the, Beach Life Realty, it would be your name LLC is the company, the legal entity. And then you could file a doing business as, you know, Beach Life LLC, you know, Beach Life Realty or whatever. And you could advertise and market that brand name.
So I've got an LLC with, and doing business as the brand, but they're very similar.
Okay.
How do to register a new LLC under my name?
Or you can do a name change. I mean, if you've already got bank accounts tied to that,
Not yet, no, just
okay.
change it.
Okay. You can do, instead of just filing a whole new company, you can go on Sunbiz and do a name change. Yep. Exactly. Yep. And then you'll want to notify FREC and the Division of Business and Professional. What am I trying to say? Sorry. Train of thought.
Professional regulation.
Regulation. Thank you. Sorry. You want to notify them of the change. So, you know, that way your licensure all matches up. Because otherwise, FREC, I've seen where they fine people, you know, and if someone calls you out on it, you can get fined. So just want to steer clear of that. I don't even know what it is now, but yeah. All right. That's okay. All right. So I just got a general, this is you here. I didn't leave you much material as far as a blank slide, but I think, you know, if you guys have any specific questions here, ask away. But I mean, Darrell's been doing a great job of just kind of chiming in, answering questions as we go.
Yeah, you know, on the S Corp, the reason I kind of tell you the revenue is $100,000, what happens is part of what you'll see people are doing with the S Corp is there's the self-employment taxes where they're trying to keep your salary a little bit lower. You know, the S Corp allows you to kind of get out of some of the self-employment tax. So what I mean by that is if you're 1099 or if your commission income is $150,000 and you run an $80,000 salary, the self-employment tax, which is Social Security, Medicare, is about 15%. You're basically not paying that on the income that doesn't go through your W-2. So the reason I say 100,000 commission income, if you're saving $30,000 at 15%, it's $4,500. That's real money, right? That's real cash. It's, you know, a mortgage payment now, I guess. I don't even know anymore.
Mm-hmm.
But the downside is you have to file an S Corp tax return on its own. You have to have payroll. So the reason I tell people not that is, conservatively speaking, let's say it, instead of me charging you $1,000, I'm charging you $2,500. You got to come up, you got to save. You don't, now I'm kind of eating into that savings. You're playing this game, but I'm eating into it. And now you have to be paying attention and you have to make some decisions before year end. So I always say it's going to cost you 20 hours of your life to stay on top of this, and it's going to cost you $2,000 more. So if you aren't on top of your stuff, remember, everybody here, you own your own business. If you're not on top of this stuff and you're not paying attention to it, just be a LLC and pick it up under Schedule C. You still get the LLC save liability
Protections. Yep.
From a tax perspective, though, you know, I have people though, when we run the numbers, we save $8,000-$10,000, right? If you have a spouse that makes a lot of money, you start losing the QBI deduction at certain income levels. So there's all these different little things that come into play. I could talk taxes all day, but just know the reason I say 100,000 commission is once you start getting above that, there's more savings and it starts to benefit you. If I tell you it costs you $2,000 to come see me more, but you're going to save $9,000, you want, you know, all day, you know, everybody will sign up for that. So it just, that's kind of where I think 100,000 commissions where the S Corp starts to make more sense. And you can elect S Corp every year. Supposed to do it by March 15th. You can do it late and blame the CPA or the attorney. But just know that, you know, you aren't automatically, in S Corp, you basically have to pick, you can elect it. And so you don't have to be that day one, you can be that later. So if you start off and you're, you know, this is your first year doing it, and you make 30 grand, next year you're halfway through the year, you've already made 150, you can still elect to be an S for that year. Okay. So, but there is some year-end planning to it.
Is there a rule of thumb of how much you should pay yourself for the W-2?
I don't have a perfect answer. No perfect answer on that.
Guideline answer?
It really will. It's always hard because remember, everybody in the room, you're not getting paid for anybody else's work. It's you're the one doing the work. What I can tell you is, don't go to an S Corp and don't run salary. That's where you get in trouble because then they get to pick. At least now, I have people that have $100,000 commission and run 80,000 payroll, and I have ones that run 40,000 payroll. They're trying to play the game. It's their decision on what they're getting paid to do, because they can say, look, I don't do much. If my neighbor calls me, I help them sell their house. But you are that game. What happens is if you run zero payroll, they're going to look at you, right? That's a red flag. You have a S corp with no payroll. They're going to come in and they're going to put it all in, because exactly like he said, you're not running it like a business, right? You're not doing the things that you have to do as an S corp. So if you're running it as a business and you run yourself a salary, you know, if the person running a salary of 40 or 80, are they right? They're probably both relatively close. They have a lot of cases where they come back and they argue the number, and, you know, I mean, it's a negotiation at worst, but most of the time, if you run your own salary, they will, and you're running it like a business, they will accept what you're doing.
Yeah.
That's a perfect non-answer for you.
And kind of going back to the liability piece. So, you know, again, with an LLC, you're limiting the liability of the company to the assets of the company. So, you know, again, you do something, you're at fault for something, they're not going to touch your personal assets or the assets of another business. You know, let's say that, you know, that bank, that really for you guys, the asset's going to be a bank account, you know, so if you've got 50,000 in there, that's your liability, you know. And obviously you guys you can multi-layer these LLCs and get uber complicated with it. You know, you can get, get a trust involved, irrevocable trust. Again, probably not the ideal scenario for you guys. It may come about someday, but, you know, for you newer agents, probably not right away. So just something to consider. Yeah. So kind of moving on and to growing your business. So maybe bringing on, you know, an employee, transaction coordinator, a W-2 for that matter, or a 1099 contractor. So I've got listed just a number of, you know, agreements to consider. And then I'll let you touch on, you know, maybe some tax issues related to, you know, having either partners or employees. So, you know, want to have a good, strong employment agreement, you know, just kind of outline the scope of the employment, what they're to get paid. Again, furthering the notion of acting like a business rather than just on a handshake. You've got non-disclosure agreements. So again, you know, that person leaves you 6 months from now, you don't want them out disclosing all of your proprietary information that you've worked so hard to create and build. Non-solicitation agreements. What that is let's say you've got 2 employees, one leaves. You know, they're not going to solicit that other employee of yours and say, hey, I think my business is going to thrive more than where you're at. You know, come with me, or, you know, solicit existing clientele, your database. So it's all about, for you guys, protecting your database, and non-compete agreements. So again, you know, you guys are independent contractors. Non-competes are a little sticky in that area. You know, much like a lawyer, we're free to work and, you know, work our trade, as are you guys. It's, you know, more so, you typically see more of the non-solicitation than you do like a true non-compete. Or non-compete would simply say, you know, I have this territory, you can't solicit anyone within 10 miles of this region. So anything you got to add there from a tax perspective?
Just very quickly on, you know, employer 1099, I can't confirm what everyone is. There is a 6-part test with the state of Florida. They're auditing these a lot right now. I've seen them really kind of hitting on, are they an employee or a contractor? Here's kind of the reason more than anything, I usually tell you to start with a 1099 if you can, and you know, and take that position is, if you have a SEP, they qualify for your SEP, right? So if you put 25% of your net income or your salary away, you got to give them 25% of their net income or salary in a SEP. Health insurance. If you have health insurance, if you have an employee, you now have to have a business plan. Health insurance is not deductible when you have other employees unless you have a business plan or a business insurance plan. So if anybody here's, you know, gone out and buying health insurance or does a retirement account, when you put someone on payroll, they qualify for all that.
Got it. Move on. So again, just some other, arrangements that may come about or you all may consider. So whether it be like a joint venture with another LLC. So, Marwin, you partner up with another LLC, buy a house, rehab it, split the proceeds, and that would be paid out to each of your LLCs. That's going to just be ordinary income if I'm not mistaken. Yeah. So, because it's a rental property, so it's obviously not exempt from capital gains. But, again, you want to have a good solid joint venture agreement, and I'm speaking from the legal side. So again, nothing on a handshake. And that JV agreement, which funny enough, one of the other sales meetings, I mentioned that the other day, they thought it was a junior varsity agreement. So, so no, we like to think of ourselves as varsity players. So, again, that's just going to spell out everyone's rights, duties, obligations as far as, ABC LLC acquires, takes title to a property, but Marwin's LLC and Luke's LLC are the two venturers. They both pool money in to rehab the place. That joint venture agreement is going to say, if you happen to die or just bow out, or, how the operational side of things works in that partnership. And then, again, operating agreement. So if you're an LLC and you bring on new members, this is kind of going beyond just the single member incorporation as an agent. But again, a good, strong operating agreement is also going to lay out the rights and responsibilities of each member and each partner.
In regard buying real estate, just so everybody's on the same page, let's just say everybody in here goes in, 100,000 piece, and we buy a $10 million building. It's going to be a partnership. You don't want S corps holding real estate. There's issues with fair market value and pulling it out of there. There's issue with basis. S corps are really for operating entities. Operating is like a business, right? I don't know, Zaxby's, tax services, right? These different things that we're doing. The S corp is for what you're doing, which is an operating entity as a realtor. If you're going to own real estate in an LLC, it's going to be a partnership. It's just that's kind of just think that through. Or if you have somebody talking about it and they, they're buying real estate in an LLC, and they, don't tell them, hey, go put that in S corp. That's not the right answer. Always. So if anybody here is investing in some of the real estate as a realtor, you guys get a lot of opportunities. You want it to be in an LLC tax as a partnership. Okay.
Yeah. Any questions there?
Yeah, so that again, the last one.
Uh,
LLC what? Tax what?
So
It's a
if
partnership.
an LLC has 10 members, it's a partnership first. You have to elect to be an S corp. So like you were talking about electing your LLC being S.
Right.
The default.
Husband and wife
Yeah.
are considered one person.
Okay.
So you're one person but if there's multi-members, so if me and you are partners, that LLC is now a partnership.
Right.
It's not an S corp, it becomes a partnership. And so it's purely these are purely taxation lingo,
Like a
but
1065 type?
that's right. Yeah. But so you don't want to elect S when you buy real estate. It's just not the right answer.
PA versus LLC advantages, differences.
Tax nothing.
Nothing.
Legal,
Yeah.
anything.
Nothing really either.
The PA costs $500 on some biz. The LLC is 140.
140. Yeah.
I don't know why that is. I don't know why they charge more.
Yeah.
What did PA stand for again?
Professional association.
And remember that fee's annual. So I mean, if you
Yeah, it's just an operating cost to you guys.
do you know why they charge more?
I honestly don't know.
I don't
For the
know.
letters at the end of your name.
Is that what it is?
Looks-
Corporate, I guess my hunch is corporate law it's a little more expansive than the LLC statutes. So I assume if it's something has to be adjudicated, or it runs up the pole and they need commentary on it, again, it's going to be a little more complex than an LLC. But from a tax perspective, from a legal perspective, they both have the liability protection. So, yep. I thought I had another one. I guess not. Okay. Anything else you guys want to talk about? I know that was kind of short and sweet, but I didn't want to, and nor does Derral, I think, want to bore you with a deep dive into the taxation. I mean, that's what, why you have your CPA. I'm not a tax attorney by any means. I will often defer to these guys.
Make sure you tell them that you're an LLC. I don't know what document, W-9, whatever you got to fill out. Make sure you give them that, because otherwise it'll show up in your personal name.
You're talking about the brokerage
Yep.
as far as commissions being paid?
Yep.
Yeah.
Make sure they know, because sometimes they won't. If you forget to do that, it ends up in your personal name anyways. It can work. It's just a little bit of a, it's just kind of a little bit more of a, one more thing the IRS has that doesn't tie out. In regards to, what's the best answer? I think the S Corp, you can win, and it really can matter, but you have to put the effort into it, because you can cause other problems by not doing that stuff right. Okay. So just know if you're going to do that, it's the extra time and effort is where you're really, it's your time as much as it is ours, right? I will tell everybody that walks in, I will say, I don't mind charging you more, but it doesn't make sense. I don't want you to pay, make this more complicated, so you just pay me and you're not saving any money. I'm not, that's the biggest thing with this is just listen to your professional. Don't try and do the S Corp stuff on your own.
No, we have a LLC, Texas A Corp in Washington, through a real estate business in Washington.
Mm-hmm.
It should be best to set up it all separate for here, right?
Oh yeah, I do your own.
Totally separate and just,
Yeah.
And how do you do for sort of joint, because it's getting the same brand, joint marketing, how do you defer the cost between the two?
I think you guys pick and choose how, what bank account you pay it out of. I would run it with different accounting and everything, treat them completely like different companies.
Yeah.
So here's a question. Let's say I'm planning, I want to run my business through the LLC next year. Timing wise, I can create the LLC now, right?
Anytime. Yep.
Anytime, and then at the beginning of the year, I can have DBPR, I can notify FRAC DBPR that I want to change and be under the LLC, correct? I can wait till then?
I think you do it anytime you want.
Yeah, you can do it anytime. I
But
mean,
once I do that, they're gonna pay me through the LLC, right?
right, you want to get paid immediately through the LLC to take advantage of, the taxation. So
Okay.
yeah, if you filed, ADC LLC tomorrow.
So what's different for me, like, okay, up to this point, I'm a 1040, I'm just Schedule C. Now I'm gonna have the LLC. So what is the?
If you don't elect S, it's still the same answer.
Yeah.
The exact
Right,
same
so it's
answer.
still through the Schedule C.
That's
Now, am I gonna have two separate Schedule Cs for this year because I'm gonna have up
Te-
through? or-
Technically, yes, we'll say, but it's,
Okay,
You show other income.
yeah, it'd be similar answer.
okay. So there's no disadvantage, there's no reason to wait to January to update in the,
From a tax perspective, no. From a legal perspective,
Yeah, I
the
mean,
LLC
they're gonna
can.
want you to update it. When you change your license, you gotta
Right.
notify them.
right,
Yeah.
right, no, I understand that. I guess what I was saying, there's no reason or benefit to waiting till the beginning of the year on any account.
Correct, no. I mean, no. I mean,
If you want to
there
make
is,
your life
it's not-
easier, if you want to make your life easier, do it the end of the year, right? So if you get to, January 1st, set it up, and just have all closings going forward in that.
Yeah.
That's a good way to look at it. Just break it up by year.
Yeah.
We're already in mid-October.
Now, I
Fortunately.
have a really odd question, because I did do my LLC that kicked in at the beginning of this year.
Mhm.
I did not know to notify DBPR. I've not sent anything to them. Am I,
I would just go ahead and do it.
okay, is
But
there
yeah, I
a
don't-
form that they have that I should be filling out, or
I
my
think you
account?
just go online and you do it
And just
online.
change it?
Mhm. And you just change the name, from your personal name to your
then the
personal name,
LLC.
LLC. and,
Okay.
Yeah, if any other information's changed, but it's just I mean, it's a Boy Scout honor kind of thing where you just need to go in and update it.
Okay.
Yeah.
Why can I not use your company name as LLC?
I don't know why, to be honest.
Seems like
It's just, I think it's a, much like you have to have Keller Williams on everything first.
Yeah.
They don't want it to be a misinterpretation of who you are, because truly it's it's an alter ego for you, right? So, to say, or they get sticky with using certain verbiage, so far as, saying the world's best realtor, kind of giving that false advertisement. So they've made it a clean cut rule and said, use your name.
So
Hey,
when you get
Justin?
paid-
Hey, yeah,
I have a couple of questions. Did someone else want to jump in?
go ahead.
Okay. First of all, I have an S corp and all that. Should I be paying my health insurance through the company, or because I am paying it through my personal funds?
You're supposed to pay it through, you either have to pay it through the business or you can reimburse yourself, but you are supposed to technically cut a check.
Through the business.
Out of it. Yeah,
Through the
you can,
business.
but you can reimburse yourself at the end of the year for the whole year.
Okay. That's a good answer. I like that answer. Also, can you talk about, I pay myself a salary, but I know I occasionally take an owner draw. So can you talk to that? Are there limits on that? How is that supposed to be handled when you're, in your bookkeeping?
From a bookkeeping standpoint, distributions are different. And what you're doing is, as an S corp, I think I tried to talk about this earlier, is you're really saving the self-employment tax is what you're doing. Those funds are not subject to that. The interesting thing on the S corp right now is anything you run through distributions gets this special 20% deduction. So I don't know if anybody ever heard, do you know what QBI is? Have you heard that lingo or term? So it's from 2016. They basically said, hey, we're lowering the C corp rates. So in an S corporation, any income that's not through your W-2 that flows through you only pay tax on 80% of it. So you get a 20% deduction. So if you make $100,000, let's say you make 150, you run a $50,000 salary, the business makes 100, right? That's on top of your salary. You only pay tax on 80,000 of that. The other 20 is just tax free. So I think that's what so the distributions only, or the income that is not run through your W-2 is the only income eligible for that 20% deduction. So
Okay.
That's kind of where, that's part of the second piece of the game. So the self-employment tax is still the biggest number. The self-employment tax, Social Security, Medicare is 15% on the first 150, and then above that it drops to 3%. So this all comes into play based on your income being under that number. So, but the QBI thing is really cool. It gets limited in certain situations. It's limited to a specific amount, 50% of your salary. So there are all these different little moving pieces, which is why I kind of said you should definitely, if you go to the S, definitely talk to someone. But the draws are just, they're not a deduction. So if you make 150 and you run 50 in salary, even if you take that $100,000 and you throw it in the ocean, you still made 100,000. You owe tax on it.
Right.
So,
So-
and those are what draws are.
So are you better off, should I raise my salary or
I think every
That's what I'm-
situation, I think it depends on the situation,
Okay.
your specific situation. That really is situational. Everybody's going to be different. It can come down to what your income looks like. It can come down to what your spouse's income looks like. It could come down to what else you have. If you're making $1 million a year in the stock market, my answer is going to be different than the only thing you have is the LLC. Okay. So I think that's a hard question to answer without being very specific to you and not
Okay.
confusing everyone a little bit.
Okay. I have one more question. Last year, I don't remember how I figured this out, but I figured out that I could have a self-directed 401k.
Yeah. Solo, they call it
Can
solo
you talk
K.
about that?
So there's basically 3 types of retirement plans to an extent. I'll call them on. There's just a traditional IRA. Everybody kind of knows what that is, right? You could put 6,000. I think maybe now it's 7 away a year. There's a little bit more. You might be able to put away an extra 1,000 if you're over 50 and over. Then what comes next is it's a simple IRA. That's just a little bit stronger of an IRA. And then there's a SEP. So most of you have heard of a SEP. A SEP is you can put away 25% of your either your W-2 or if you're just an LLC, 25% of your net income in the business. So a SEP is your kind of that mid-tier. So if you make $100,000, you can put 25 into a SEP or 7 into an IRA. You can pick either one. You don't have to do it now. Where the SEP comes in to be a problem is if you have employees, right? Like I talked about earlier, if you have anyone else on W-2, they now qualify for your SEP. So you got to be a little careful if you're employing people with a SEP.
Be contributing there.
The 401k is so let's just say you run a salary of 50,000 and you make 100 on the business, right? So you make 150. Let's just kind of start that up. It'd be not, I'd
Whiteboard.
draw. Yeah, I don't want to get that far into it. But right now on a SEP, you can do 25% of just the 50. Okay, so that is 12.5. Okay, a solo K, which I'm sorry, what was your name?
It's Terry.
Terry. A solo K basically is the same thing as a 401k. You can put approximately 20,000 away. If your salary is 25, you can put 20,000 away. You get to this max on the solo K, similar to if you went and took a job at, Walmart. You get the same 401k as they get. The max you can put into it is approximately $20,000. So as long as your salary is above 20,000, you can do 20. So it actually allows you to put, so a $50,000 salary, you can put away 20 versus a SEP can only do 12.5. So it's just another way to do that. And then on top of it, there's other pieces you can add to that and do more and more and more. You can do both, but it's limited to the max 20. So you can't do 12.5 and 20. Does that make sense? So you get maxed out at the 20. And then what happens on top of that, there are other plans you can add. The reason the solo K can sometimes they'll be less interested in it. If you're working with a financial advisor, the solo K, it can only invest in certain products. A SEP IRA, you can kind of put in anything. I say anything, you can kind of self-direct. You can run where your SEP IRA, what it's invested in. If you want to buy Tesla, Apple, you buy that. Solo K, they kind of, I don't know if anybody here has ever worked anywhere else where they kind of have these like plans based on what year you're going to retire. So you can buy a 2050 retirement. It's based on, there's not as many investment opportunities. And then kind of the bad side, the last piece on the solo K, and this is way down the road, if you have more than 250,000 into it, you got to file a tax return for it every year. So now you're paying somebody $1,000 a year to file a tax return for the darn. So it just continues to add. So I probably went way too far into that, but those are basically, there's the IRA, the SEP, and then the solo K. I personally, the SEP and the solo K are both good options. I think if you're making $200,000 a year and you want to put away 40 grand, you can take the solo K and add these other pieces onto it and get to bigger numbers without maybe really having to ramp up your salary. So the solo K really allows you, that's the piece at the end as you're starting to hit bigger numbers that you really can go to.
Thank you.
You got all that down, Terry?
Well, I kind of brought it up because I think it's just something a lot of people don't know. So I kind of really wanted everybody else to hear it because
yeah, I mean, there's a lot of options.
Yeah, I mean, I'm 62 years old, so it helped me to be able to put away a lot more than $7,000.
Right.
Yep.
And saved me on taxes. It brought my salary way down.
You can basically put away 20. You can put in 20 plus 6% of your wage or your business income.
Right.
So, it allows you to put away a pretty good chunk.
Can the company match it too? So if I say I put 15,000 of my own money in, my LLC can.
Yeah, they can do 6% of your salary. So it
Okay.
gets maxed out at a certain number.
Yeah. Okay.
There are plans you can add on top of it to get further along though. It's just they get very expensive very quickly to get somebody to take care of you on that end. It's called a cash bounce plan, defined benefit plan. I've got, somebody that has done really well their whole life, but they have 3 kids, 4 kids that go through college, paying for weddings, and all of a sudden they're 60 and they're making $500,000 a year, and they haven't put enough in their retirement plan. They say, hey, I'm making $500,000 a year. I want to put away more cash. These cash balance plans, I've seen people be able to put anywhere from $100,000 to $300,000 a year away. So that allows them to kind of supercharge their retirement plan. I see those more as people get a little bit older. But everybody in here, it's a really good plan if you're doing very well, if you're the only employee. When you add other employees, they qualify for these things. So that's where, it becomes less exciting to add employees.
Thank you.
Anything else?
Just a question, if you bring on an employee they're entitled to, wouldn't they have to be a full-time employee?
Yes.
Yeah.
So as long as you keep them part-time.
You can usually make it to where they don't qualify for the first year.
Okay, if so many years, yeah. Okay.
Yeah, there's a few different things that can come into play on that.
You're fine.
It just means you're paying these TPAs and things more money to do the calculations, and it's just more money out of your pocket in different ways.
Good. Anything else? You guys get some good nuggets? Okay. If you have any questions, I'll share Derral's with your permission.
Yeah, it's fine.
Share Derral's information if you guys want to reach out, or in mine, of course. And, if you need any help on either end, whether the legal side, kind of the setup, or the tax piece of it, we can collaborate. So thanks for your time. Thanks for having us.
Yeah, and now's a lot better of a time if you ask me a question now. Like I say now, October, November, December is a lot better time to ask me than like March or April, because I'm a lot nicer
Where's your
from
business?
October to December. So,
You guys Zoom anything out there?
Thank you.
You're welcome.
I
All
have.
right, we're signing off. Thanks, everyone.
We have 3 offices. We're about 50 people. I've got an office. My main office is Ponte Vedra, just south of Butler on A1A. That's where just 45 of us are. And then I've got a small satellite office in Nocatee with 2 people, and then I have a Gainesville office with 3. Yeah. So I live